Now for some exclusive insight into what went on behind the scenes in South Korea. After the meeting, Bloomberg's chief Washington correspondent Peter Cook caught up with U.S. Treasury Secretary Tim Geithner.
What's the significance of the fact that G20 even addressed exchange rates for the first time ever in this document?
Well, it's very important. Again, we've had a long period where the major economies, principally Japan, Europe, and the United States, bore all the burden of cooperation on exchange rate questions. They dominated all those discussions, but the world's changed dramatically, and it's very important that we're discussing these things with China, with India, with Brazil, with the emerging market economies all around the world that are growing so rapidly and are going to be such a promising source of future growth. So it's very important to have these countries come together and talk about these things in much more detail, with much more candor for the first time.
This language in here commits G20 nations to move towards more market-determined exchange rate systems that reflect underlying economic fundamentals and refrain from competitive devaluation of currencies. Does this obligate China to do something it's not doing right now?
China is doing two very important things now, which of course we want to see continue. One is they're putting in place some very important reforms to shift from an export model of growth to a growth model driven more by domestic consumption, more by domestic demand. That's enormously important. They're doing that because they recognize that in the future, doesn't make sense for them to depend so much on exports. And it's very important in the United States and China's trading partners to see their domestic demand, their demand for imports start to expand more rapidly in the future. They're also letting their exchange rate move up. And they're doing that because it's in their interest. It makes no sense for China to have monetary policy set by the Federal Reserve. They're an independent country, large economy. They need the flexibility to run their policies in a way that makes sense for China. And that requires they let their exchange rate move up over time, as they're now doing. Now, we want to see that continue. They've got a ways to go. But I think they're committed to do that because they recognize it's in their interest.
Did you receive any assurances from the Chinese during the course of your talks this weekend that recent progress in terms of the acceleration of the Yuan appreciation, that will continue at that pace?
I think it will continue because, again, I think it's very much in China's interest. And, of course, they recognize it's important to the world as a whole. I mean, countries around the world are affected by what's happening in China. China recognizes that. And I think you're going to see them continue to move.